If you're hearing funny noises in the background, that's my bird, Cole. He's an African gray parrot, and yes, he talks. I am the founding partner of Runway Venture Partners. We're a B2B SaaS investors in post-seed, pre-A rounds, typically leading rounds of about $3 million into B2B SaaS companies that have found some level of product market fit, but aren't quite ready for a big $10 million Series A type round. So we typically provide the capital on Runway for another sort of 18 months of runway, as well as a ton of coaching to get from where you are now to being investable as a Series A company. So that's me. Why don't we go around the room and let everyone else introduce themselves?
I'm going to hop in first. I'm the other investor, so I'll hop in as well, Mark. I'm Kate. I'm a principal at Homebrew. We are a seed stage fund based out of San Francisco. We're generally leading or co-leading seed rounds with our average check being... Yeah. So we're usually leading or co-leading seeds. Average check is $500,000 to $2 million. Kind of similar to Mark, a lot of our value proposition comes around coaching and being really engaged with the founders that we back. But we invest across industries with tech and tech-enabled companies. So that's us.
Okay, well,
Should we start calling on people?
Yeah. Yeah, go ahead. Yeah.
All right. Hi, everyone. I'm Nami. I'm the founder and CEO of Harvest Platform. Harvest Platform is a platform to eliminate bad debt using artificial intelligence. And the product that we have out in the market, one of our first, is an AI solution that can automatically negotiate your bank fees, credit card charges, and other forms of debt that you do not have the ability to pay back. You can imagine how that product is faring in this environment, seeing a lot of demand. Obviously, because people's paychecks are obviously dwindling down. We are based in New York, a team of 9 people, and we have raised 3 so far in our previous seed round. Good, comfortable runway currently, and thanks for obviously being a part of this. Excited to learn more.
Julia?
Sure. Hi, guys. My name is Julia Hawkins. I'm the founder and CEO of a company called Cabinet. I used to be an executive assistant, and now I'm pioneering with my team a new technology, a new category called admin tech that empowers executive assistants and admins in the 21st century. We're based in New York, about 2 years in business, team of 4.
Great. Chris?
Hi guys, I'm actually an MBA student. I'm here to record the session and sort of learn as much as I can. I'm in the middle of sort of interviewing for internships with VC funds and startups. And actually when I finished my undergraduate back in 2015, I sent a cold email to Homebrew, to Hunter and Satya, so I know the fund well.
I hope they replied.
They did.
Good.
Okay, great. Christina?
Hi, I'm actually here to record as well and learn as much as I can. But I work at JP Morgan in a group called Private Business Advisory within our private bank, and we advise our business owner clients on transitions, which generally is sale to third party, but occasionally passing it on multi-generationally to children. And also, you know, from time to time, advising on capital raises and whatnot.
Great. Dimitri?
Hi, I'm the CTO and co-founder of WeStock. We're kind of like a B2B SaaS company. We help brands turn their followers and consumers into sales, and we provide them with like software and kind of sales help. And we just kind of tried to raise our seed round, and it all kind of fell apart because of everything going on. So that's kind of where we are.
Okay. Jamil?
Hi, everyone. My name is Jamil Cream. I'm the founder and CEO of Hiki.
Hiki, which means able in Hawaiian, is a friendship and dating social platform specifically for the autistic community. At risk of apologies for the morbidity of this, but autistic adults between the ages of 18 and 33 commit suicide 15 times more often than their neurotypical counterparts. And it has absolutely nothing to do with the neurology of autism. It has everything to do with just a fundamental lack of infrastructure and resources for social opportunities. So we're looking to solve that problem.
My son is autistic, so I can relate to that. He's 24. Did we miss anyone? Matt?
Sure. Hi, I'm Matt, one of the co-founders of Clay. We're based in New York, team of 5. We're working on basically a new version of Rolodex. We don't like using this term, but people have sort of talked to us about as being a replacement for a personal CRM that you can use in your personal life.
And Roman, I think.
Hi guys, I'm Roman. I'm a co-founder and CEO of Nutrient. We're using deep learning to bring food as medicine into clinical practice. We're based here in New York. We've just finished building our product and we're looking to raise our pre-seed.
Great. So this session is about raising capital. So just going to throw it open to questions from all of you.
Can I make a quick intro as well, or?
Sorry.
Oh, sorry about that.
No worries. My name is Yuri. Matt, first of all, quick note that we explored something in the Rolodex chatbot space a few years ago. I might still have rolodex.ai domain. I'll double check if it's still there. Hi folks, my name is Yuri. I'm founder of Puma Browser. Our initial pitch a year and a half ago was privacy-focused browser with micropayments built in to enable people to earn a living online. We've since, over the last few months, shifted the narrative much more away from privacy for now to helping people earn a living. We think it's a much more pressing problem. We still believe privacy is really important, and that's always going to be a core part of our value proposition and business model, but helping people earn online is just an accelerated need that we're doubling down on. We raised an angel round from Chris Larson and Stefan Thomas, who are the founders and CTO of Ripple. And we were in the middle of seed fundraise when this thing hit. We were lucky to switch to safes. So some of the money from Japan and a few other funds locally came in. The rest is put on hold till 3 to 4 to maybe longer. We're super scrappy. We're remote first. I'm the only one in San Francisco right now. We were in the middle of planning a move to New York with my girlfriend, but that's also put on hold for now. My grandparents, uncle and aunt are in New York, so we'd love to be there, but I think right now is not the best time to be doing a cross-country move. But yeah, definitely looking forward to visiting as soon as we can.
Awesome. So I think we can just open it up to questions then.
I'll start. So we are a B2C company. I know Homebrew invests in B2C as well as other companies. Obviously, Marc, you invest in mostly B2B SaaS. But I'm curious as to how you start, how you think about during Series A. How you think about new KPIs that companies need to meet, whether it's B2C or B2B. Obviously, there has been a spectrum of different kinds of story, team, KPIs, metrics, growth rates, etc. That was all over for VCs and their appetites in terms of Series A investments. But I'm curious how the metrics have shifted because of coronavirus and what lies ahead.
Yeah, so on the B2C side, and I think in general, I don't think anyone really has the answer to that yet, unfortunately. I think every seed investor complains about Series A investors moving the benchmarks back and back. And I think we'll likely see that even more with some of this crisis. And so I think it's hard to know exactly what metrics folks will be looking for. I think particularly for B2C companies like you, especially in the fintech space where acquisition costs can be so prohibitively expensive. I think that what investors will continue to be looking for is that you understand at least which cohort of your users have unit economics that make sense for you in the long run, that you've identified a segment of your user base that you can acquire for either inexpensively enough acquisition or high enough LTV, and that you have a plan to scalably acquire more of those and less of your worst customers in the future. It's hard to say exactly how that will change with some of the ongoing concerns. But as you said, like, you should be seeing your demand pick up. Sounds like you're going after a segment of the economy that doesn't have a lot of discretionary spend anyway, so that should still continue to, be around for your business.
Yeah, are there certain, I guess, like Northstar revenue and growth projections, though, that one needs to be tracking in the B2C fintech space?
I think it's less about, oh, go ahead.
I think pre Corona, the traditional metrics for Series A was you want to be tripling coming out of the year prior. And, if you were at, low 7-figure, kind of run rate, you should be going in, let's say you were going at $1 million last year, you should be, getting to 3 million run rate by the end of the year. And I want to emphasize Kate's comment about unit economics, because I think one of the most important things is that you actually know your unit economics and that they're positive unit economics. And that there is a very repeatable process for customer acquisition and a very knowable cost to that customer acquisition, as well as a knowable lifetime value of that and how that customer behaves post, onboarding. And I think, though, that people are going to look in today's environment at your trajectory sort of in Q4 of last year, and maybe, January and February of this year. And then they're going to understand, for the most part, that, COVID has changed the world. But if you come out of this, over the next, 6 months and you still doubled your revenue in this environment, that's going to be great news. That's going to tell the world that you're selling a product that is a must-have and not a nice-to-have. And I think people will assume that, had there not been COVID, you would have done much better. If, on the other hand, you come out of this sort of flat from last year, that COVID just, completely flattened or turned negative your revenue, well, it tells the VC it's a nice to have product, and I'm going to have to wait for times where, discretionary purchases are, we're in the environment for discretionary purchases again.
Thank you. That's very helpful.
Yeah, so I have a question. So we just came out of FoodX Accelerator run by SOSV, and we're I guess probably much earlier than most of you guys. We're looking to reach out to pre-seed investors. The problem is our current investor, SOSV, they do have a large network of maybe later stage investors, and the pre-seed investors that we would like to connect to, we don't usually have a warm connection. So my question is, being that we don't have a warm connection to you, how would you like to be approached by someone, in a cold email? What's the good way to be approached?
So
Well,
I think, go ahead.
I said, I think you were in my last session, Roman, that I'm always disappointed when I see a lot of entrepreneurs sending me pitches that have nothing to do with B2B SaaS, when it's very knowable that all I do is B2B SaaS. So I think, getting a targeted list of investors that invest in your category, I think is very, very important, number one. Number two, if COVID is going to have a negative impact on your business today, then I would start the conversation that you're not expecting anything other than to start a dialogue. Take the pressure off of them for a yes or no answer, and just put the frame the conversation as, I just want to start to make you aware of us, so that once the environment changes, we can reinitiate a dialogue. I'll pass to Kate.
I think, for us, we look at every cold email, I guess, unless it gets caught by a spam filter. So number one, make sure that your email doesn't read as spammy, because a lot of them do hit my spam. And then I think a couple things, there's a few little tactical things, like make sure you're sending it to folks' email. Like, please don't LinkedIn me a cold pitch, which happens it's just like much harder for me to keep track of. I think the key things are just like keep it short. Put in whatever would make me want to be excited about the business. Make the deck an attachment. Just like make it as easy as possible for the investor to open it up on their phone on like 5 minutes in between meetings. Some of you guys might have been in or were in my previous session, which Hadley said something that I think is like really hard to, or maybe one of the moderators earlier, just like it's hard to imagine unless you're in this seat how much like these tiny extra increases of work like really add up. And so it's things like having to go on DocSend on your phone, but then like your phone's locked one way. It's just like lots of little things. So make it as easy as possible for me to get to the meat of the message. We reply and take pitches from cold emails all the time. And then if you're thinking about the best way to get a warm introduction, probably the best and easiest way is if you can find your way to get to know somebody who is a portfolio founder of the investor that you're looking to reach out to. Because that's like the best signal to me that one of the founders that we've already invested in would speak highly of you. I think that's the best warm intro, but obviously that's not always possible. And a good cold email is way better than a bad warm introduction.
Got it. Thank you.
If I can add a quick note, following up on that, totally agree with Kate. One thing I kind of like over-focused. Again, this is the first time real kind of founder raising money mistakes that you will always make, which is over-focusing on media perception of investors and over-focusing on VC Twitter. That's like one of the biggest time sinks out there that can be. There's no correlation between reality and what is said on VC Twitter. So talking to other founders has been the best investment I've made in the last few months. I highly encourage it. I'm available if you want to hit me up. We have a Discord that we use for our community of users. We are also happy to spin up one for like a channel for founders who want to chat. That's talking to founders has been the best way to actually advance in fundraising for us. So I highly encourage doing that. And also, we're lucky to be in position, not needing to raise money, but getting to that position is always a good position to be in. But also realizing that investor relationships are forever. Like, these are the people that will be with you for 7, 8, 10, we don't know how many years. And I was at one point also like rushing for kind of cold or warm any interest to some investor firms. What you really want to try is to build natural relationships with founders in the community and take it from there. I think that's been the best transition of effort that I've seen for our company that really worked.
Thank you. Other questions?
Perfect. Thank you, Yuri. Could you actually share a link to your group?
I'll do later.
Check it out.
Yeah. I had a quick question also, go ahead.
Sorry, I just wanted to ask other founders, is there any good way, or did you find any good way during these times of quarantine to meet other founders? Because it was much easier before. You just go to a meetup and you mingle with a bunch of people, but like meeting people over Zoom is not as easy.
So I'm Canadian, so I'm Ukrainian Canadian, mostly Ukrainian, but also part Canadian. And Canadian founders have amazing Slack. So if you are one, then you should ping me, and, and we shall add you to the. It's like, the joke of like, how do Canadian founders raise funding? They raise a Series A.
That's terrible.
I'm originally Canadian, so I actually understood that, but
thank you.
And I was Trailer Park Boys, so I understand as well.
So I think for other food founders, Roman, who have raised money. There are a group of investors that do focus on the food category. And so, you don't have to drive a new road it's been tread before. And your other food co-founders will know who those investors are.
Yeah. So we do have a very targeted list, and we know exactly who we want to target. The problem that we have with with warm introductions, that it takes way too long. We want to, reach out to 40, 50 investors and set up, densely meeting one after each other to get our fundraising started. And, it just takes way too long to kind of double opt out for introductions. And, we don't like to waste time. So we would like to just, start reaching out with cold emails as well to kind of get the ball rolling.
If you're going after a targeted list of investors that invest in your category, a lot of them will react positively to a cold, email. It's always better if it's warm, but that's not necessary any longer.
Got it. Yeah, I mean that was basically the main point of my question. If people actually read cold emails, and what's the reaction?
They totally do, but you need to get to the point quickly.
Got it.
Someone told me that actually a good cold email or like slightly warm email is much better than a super hot introduction, because then investors will take a meeting because they feel that they owe the person who introduced a meeting. So they're probably not going to invest right away. They know they're not going to invest, but they're going to still take the call or a meeting because it was such a warm introduction, which is kind of a funny effect. So a very good cold-ish intro is probably way better than that. At least that's what we've been told.
Ask a really hot intro if you can. Like, who cares why someone takes your first meeting? Like, get to the first meeting and then blow them away. Like, who cares if they felt like guilted into taking, like maybe some people feel guilted into taking first meetings, but like get there and get in front of them and then like explain your company. I wouldn't, like, if you have the opportunity for a hot intro, like someone who really knows the fund, I would take it for sure. I don't think you need it, but take it if you can get it.
So I have a question.
Definitely, if you have a hot intro.
Yeah, take it.
I'd like to know from Kate and Mark how long processes usually take, like from first meeting to investment.
For us, I'd say it's typically a 3 to 4 month process between the first meeting, getting to know the entrepreneur, getting to know their team. Because we're not pure seed, typically our companies will actually have customer references. So we will run probably half a dozen, customer calls, and that certainly takes time. We'll also spend a bunch of time on, the financial modeling of the company and what's the right amount of capital, where's that capital really going to be spent, how long is it going to last them, what are the KPIs that we want to set up and start to monitor, because you're no longer, for us anyway, you're no longer a pure seed company. Now you're turning into an operating business. And as a Series A investor is going to want to know that you actually know how to scale your business, recruit a team, put in the KPIs for that team, and manage to that, so that when they write a check for $10 million, you're not going to spend the first 6 months of their investment, floundering around trying to figure out what you should have figured out, a year ago.
For us, I would say the average length of time is like 2 to 3 weeks. It's probably closer to 3 with just like coordination over video and like everyone being siloed versus like us sitting across a table from each other all the time. I think as you kind of think about raising money and finding that balance, there are funds out there where part of their value proposition is getting you an answer really quickly at seed. Like NFX just came out with, like, I think 9-day promise. There are funds that have a 48-hour turnaround. Take that for what you will. I hope you don't need the money within like 3 days or you're going to go out of business. But I would say, a lot of investors have different like timelines, but just make sure that if an investor is taking longer than you would ideally want, that they can tell you the questions that they're trying to answer for themselves, right? An investor that takes a long time just because they are like not really getting around to doing the work for you versus an investor that's taking a long time to Marc's point, because they're spending hours on customer reference calls and doing the financial modeling, are very, very different levels of interest, and try to figure out which one that is as you kind of weigh the decision to wait or not wait.
Cool. Thank you.
Anything else we can answer for the group?
I'll go. I would be curious to know, as you guys think about this, I guess, Marc, since you sort of deal between sort of the seed stage and the Series A, how you think about projections based, because you can sort of see something working. Like, what are some models and things that you guys have seen or seen in decks that you've really liked, and how should you think about it? I know you guys alluded to it a little bit earlier about unit economics and things like that, but what specifically do you guys like to see?
It's a great question. It's not a short answer. So, typically we will ask for, 5-year projections, but understand that anything past year 1 is really just a guesstimate. It's really just our asking you, what do you think the potential, how do you see this rolling out within a range of possibilities? However, in that first year, we expect that to be really tight. We expect that first year to be your budget, not a projection. That's how you're going to operate the business. So that's who, you're laying out who you're going to hire, and you're laying out your revenue projections, you're laying out your KPIs and the unit economics, your current unit economics. If you expect your gross margin to improve, which a lot of companies do, why is that? How are you going to justify that? Are you expecting your cost of customer acquisition to improve? Again, you've got to justify that for me. And so we're looking at, CAC to LTV, payback time periods, channels of again, I'm giving you sort of a SaaS investor's sort of frame of mind. How do things move from the top of the funnel, down? Where do the leads come from? What are the cost of those leads? And then what's the ultimate cost? What's the conversion rate from entry point to market qualified to sales qualified leads? So we'll look at all of those things, and we expect we get confidence in an entrepreneur who has thought about those things deeply, and has learned from the experience that they've had over the first year. Again, our companies are in market, so they've had experience with, customer acquisition, customer service issues, and we want to see that the entrepreneur has thought about all of the issues that they're going to deal with as they move into a scale business.
Yeah, and on the flip side of that question too, what are some things that you sort of see as like vanity metrics, and you're like, okay, like this is sort of like people are padding the deck and it's not? What are the red flags also?
Market size. We'll see entrepreneurs, say this is $100 billion market, right? And then I'll naturally peel away that, well, how do you get there? And from a bottoms up basis, prove to me that it's a $100 billion market. And it turns out that, for their addressable market, based on the number of potential customers and the unit prices that they're going to get from each average customer, that it's really only a $10 billion market, right? So we see vanity metrics really around market size, maybe market penetration rates of what they really expect. But look, any 5-year projection you put out there, we know it's going to be wrong. It might be better, it might be worse, but it's going to be wrong. So we only use that as sense of your judgment. Or you expect to be a $100 million business in 2 years? Well, probably not. And if you're really promoting that, I think you're not thinking too clearly, and probably not the entrepreneur I want to back. So it's as much a test of you as an entrepreneur and your thought processes as anything else.
I would echo that. Like, if you have any number that's really eye-popping and you can't really concretely, probably in multiple ways, back it up, take it out of the deck, because it'll just erode the investor's trust and all the other things that you're saying as well.
For sure, that's super helpful. Thank you for sharing.
I think we have like 1 minute left. If there's anything else quickly.
Oh, Matt,
we can
by the way, I want to get, I'm really interested in your product. I'm looking for something like that. So I want to get your contact information.
All right, we're getting the kicking us out countdown. So we'll see everyone back in the main session. But thanks so much for chatting with us, guys. It was a great conversation.
Thank you.